Happy May, everybody, and welcome to our monthly newsletter. As you know, if you paid attention last month, we're breaking this up into segments, so each week we'll have a shorter newsletter that kind of has a highlight. We're going to talk about the market update, but before we do that, we want to say congratulations. The big news in April for us was that Chantel Schakowsky, our team member, real estate agent on our team, and her husband Lewis had their baby. Gordon Gray was born on the 10th. Came in at 8 pounds, 5 ounces, and over 20 inches. He is beautiful. His mom is doing great. His family's doing great. Even Bogey's doing great. So congratulations to the Schakowskis, and we can't wait to spend more time with him. The market update, normally Stephanie's here, and if you look down below in the newsletter, you'll see a more in-depth numbers kind of analysis by her. But just to give you a little update, sales, the sales price is across the board, whether it's Hudson, like Elmo, Stillwater, the Twin Cities, is up as we expected. The number of sold has remained steady. We might see an uptick as the spring moves into summer, as some of those new construction homes are completed. And new listings seem to be, again, below what we'd like to see them. But we can feel that here. We're getting a lot more calls. We're working with our sellers, getting their homes ready. So even though they seem to be low historically, we're seeing a little more going on. But like I said, look down below, and Steph gives us more detailed and in-depth analysis of that. The big question or concern on everyone's mind is interest rates. And so I have here with me today Dave Craig, Mortgages Unlimited, our mortgage advisor, to talk about interest rates, where they've been and where they're going. So hello.
Hello. Well, as you know, rates have been going up here since the beginning of January, and the main focus or the main cause of that, I guess, is with inflation. Mm-hmm. So with the Federal Reserve trying to get inflation under control, it's caused mortgage rates to creep up. And so the prediction here, for example, I was reading some things about what we expect in May.
Right.
And in May, they expect them to continue to rise, but maybe not at the pace that we've seen them going up in the last couple months, so maybe slowing down a little bit. Again, it's all because of inflation. So the Federal Reserve is going to probably raise the prime interest rate again in like May or June, which will cause, we probably already built that into the mortgage rates actually right now, but it's still going to put that pressure to keep them going up a little bit.
And I think I did a reel about a month ago, so again, follow us on social media, where we explained that just because the Fed raises the rate, it doesn't immediately mean the mortgage rates go up. There's it's how things are bought and sold. And so, like you're saying, they've already kind of padded it a little, anticipating it.
Yes, so there's a correlation between the Fed raising the rate and mortgage rates, but the correlation is how the market reacts to it.
Right.
So the Fed comes out and says, hey, next month we're going to raise the prime a quarter. The market reacts right now. Mm-hmm. And that's why we have it built in already.
Right.
So a couple of economists' comments I read this morning did say that that's already built in. But the things that could change it, one way or another, maybe up or down, is can the Fed get inflation more under control? Mm-hmm. So if that keeps being a problem, they're going to keep pushing up. But if we had another pandemic, outbreak, or if the Ukrainian war continues to get worse, and that could cause, they said, a little dip maybe in rates. Mm-hmm. Not a lot, maybe 0.25% or something like that, but timing would be really good at that point if you're looking to buy, because you might see in the next month or two maybe a little bit up and maybe a little tick down.
And what a crazy world we live in, that we're like, oh, well, if we get another wave of the pandemic, or if war gets worse, it might be a bad.
Yeah, and a good example is you probably heard in the news that China's had the outbreak now, and they're actually locking down really hard on it. Mm-hmm. And so the concern right now, again, is with inflation, with supply chain.
Yes.
So if they start shutting down manufacturing, we're going to see a slowdown in the products coming over, which is going to cause inflation problems again.
Yeah.
So that's one thing they did mention this morning. I did, though, do some research on rates, and I looked at interest rates from March of 1990 to March of this year, 2022, and the average interest rate's 5.98%, and 30-year rates right now are around 5 1/8.
Okay.
So we're actually below the historical average for those number of years.
I know, and it's hard to, for some people that's a little bit hard to stomach when a year ago they were down in the 3s, mm-hmm. and they're like, now we're in the 5s. But it is, and I say this over and over again, it's still a good time to buy. It's not a good time to wait.
Right.
get
think
into the market.
Right. I think it's a great time, because I don't think they're gonna go down much.
No, not enough to make it worth the risk of waiting as they continue to go up.
Right. And I've been doing this for quite a while, and this is kind of the trend I always see, is they go up, and then they, couple of years, 2 or 3 years, they drop back down. So then you see people, you have an opportunity to refinance.
Right.
And get that payment
Right.
down again.
And if you're waiting, thinking, oh, I'm gonna wait another year, or so before I buy, because rates might dip, well, prices are gonna keep going up.
Yeah, so that's another thing. The predictions are the pricing is gonna continue to increase, not at the pace it did last year.
Right.
But they're gonna keep going up. So if the rates are up and the price goes up, you don't wanna wait. Every $10,000 is gonna cost you about $50 a month in your mortgage payment.
Right, so, I mean, that's doable.
Yeah.
That's like a Starbucks coffee every week. Something like that.
Yep.
Thank you. So, I mean, I guess the message here is rates have consistently gone up more than we anticipated at the beginning of the year, but not above the historical average. It's still a good time to buy. Don't wait. Give us a call. We have a team of real estate agents here willing to help you. So, thank you so much.
All right, thank you.
So there you have it. Interest rates have increased, but they're historically below average. It's still a good time to buy and not a good time to wait. If you have any questions about what you qualify for, please look in the newsletter below, and we have Dave's contact. He'd be willing to sit down with you and talk about where you are and where you need to be to purchase. Stay tuned next week. It's a beautiful time, and if you're interested, and even if you're not, if you're interested in buying a home in the St. Croix Valley area, Hudson, Stillwater, Lake Elmo, Afton, up to Marine, and into White Bear area, please give us a call. Next week, Connie Paulson will be here, and we will talk about all the fun things happening in the area, local events. See you next week.